Assalamualaikum and a very good day to everyone. My name is Badrul and this is my friend Maizatul. We are from management, student from Management and Science University, and today we'll be present about two company analysis that we choose, which is Pokong Holdings Berhad and Tomei Consolidated Berhad. This presentation is under our subject security analysis and portfolio management, which is for a lecture by Ms. Hidayah. And okay, Pokong and Tomei Consolidated Berhad has been in the same industry with a similar product, which is gold and diamond. The things that made it different is the company performance in terms of economy, financial, and competitors management. So for the next slide. Okay, for the agenda outline that we will present on this presentation is the first is company background, which is Pokong and Tomei, and the SWOT analysis. The second one is fundamental analysis, which is economic analysis and industrial analysis, the competitors for Pokong and Tomei. And the third one is the company analysis, which is the calculation of the ratio for both company from 2017 until 2019. And the last one is technical analysis, which is the candlestick graph of these two company. Okay, for Pokong company, the principal activities of the company are engaged in business investment, holdings, and provision of management service. The company engaged in additional business activity as a distributor and supplier of jewelry, precious stones, semi-precious stones, and gold ornaments. Its subsidiaries are involved in manufacturing, trading, supplying, and retailing of gold-related jewelry and gems at its chain stores. So for the company operates through three segments, which is trading, manufacturing, and others. So example, the manufacturing segment is engaged in the manufacture and dealers of jewelries, precious stone, and gold ornaments. For the trading segment includes suppliers and retailers of jewelries, precious stone, gold ornaments, and gold bullion. So for the other segment is engaged in investment holdings. So for their vision is Pokong vision statement is to achieve product and service excellence. So for their mission is number one to be largest jewelry retail chain. Number two is to offer extensive range of local and international. Number three is to continue leading the gold market and establish in-house brands. And number four is to be most preferred jewelry brand for all occasions. So moving on to Tomei. Okay, for Tomei Consolidated Berhad, which is the principal activities is the company's core operation includes the fund keeping and management services to companies as the manufacturer and retailers of gems, diamond stone, and gold accessories. The firm has been involved in additional commercial operations. Their companies are engaged in gold-related jewelry and gems production. And other than that, exchange, import, and sell at their chains. So for the group of Tomei has 56 jewelry retail outlets and 5 retail kiosks within 4 major umbrella brands, namely Tomei, My Diamond, TH Jewelry, and Lee Lumiere. So for their vision is to be the number one profitable and efficient jewelry company in Malaysia by 2020. And their mission is number one is pioneering in product superiority and design creativity are Tomei leads. Making sustained effort towards brand significance to gain customer trust are Tomei priority. And the next one is service excellence is Tomei patient. And the last one is developing a progressive organization with dignity is Tomei ultimate goal. Okay, for this slide, I will present about the SWOT analysis for Pokong first. Okay, for the first one is strength for Pokong is Pokong Holdings Berhad was Malaysia's biggest manufacturer of gold jewelry. Pokong have the adaptability in money related and lower financing costs and liquidity hazard as a result from neglect to advance reimbursement. So for second one, for the weaknesses of Pokong is buyers from East Malaysia incapable to buy any endowments from Pokong due to there's yet to be any outlets in Sabah, Sarawak. The extension of Pokong outlets in East Malaysia was arranged and access to occur in 2017. Okay, for the next one is opportunities for Pokong is Pokong can extend its business to China showcase. This is mean that Malaysia is getting a charge out of a zero obligation for selling out adornments item under China Asian Free Trade Agreement. Moreover, China as of now the sparkling interest of gems market and import license has been done for remote shippers who wish to bring gems in items into China. So thus, because of that, it turns into the open door for Pokong to extend its business to China showcase. And for the next one is threats for Pokong is the rivalry is one of the dangers of Pokong. As a result, the shopper can decide for different options from various goldsmiths since Pokong isn't the main player. Primary gems items are separate dependent on their structure. Okay, for Tomei SWOT analysis is the strength of Tomei Consolidated Berhad is the quality product offerings. Tomei Consolidated Berhad is the only jewellery in Malaysia with the accreditation of the National Mark for Malaysian Brands certification from the SME Corp. So the weaknesses of Tomei Consolidated Berhad is the performance of the company was affected by many external factors, both locally as well as international development. The much uncertainties created has posed a great challenge to the company. And the next one, opportunities. Tomei can enhance the customer services. This is why in the business of jewelleries, there is need more creativity and innovation in the design of jewelleries. So um, a unique design of jewelleries is better in catching the attention of customer. The design of the jewelleries is being supported with the process of gold recovery and refinery jewelleries polishing, jewelleries plating, laser welding, and laser engraving. Every step of producing is being handled carefully to produce the high quality of jewelleries to compete with other companies. This is why Tomei can enhance uh, 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 the customer service. So for that one is threat. There is growing competition among the jewellery retailer. Tomei Consolidated Berhad faces the strong competitors such as Okong, Wacan Gold, and Wacan Gold and Jewellery and Habib Jewels.
Okay, for the fundamental analysis, I will cover economic analysis for Pokong and Tomei and also industry analysis. Okay, for economic analysis, Pokong hit its 100 outlet in 2011 and has been seen become Malaysia's largest discount jewellery shop. Okay, in that it's claimed that Pokong net profit in 2019 is 8.08 million and is increasing in the same year. The profit margin is increasing in the same year. The good profit margin, the better outcome was 20.7% and the good profit margin increased in the same year. The better outcome was a 20.7% drop from 258.36 million previously in sales of 205 million. In spite of the global uncertainties that have caused many customers to shift their investment strategies from equity to gold, they remain resilient in the market. Gold-based commodity demand will continue. Okay, in this unexpected condition, it's optimistic that the company will face obstacles ahead in the end of 31 July 2020. Okay, as we know, economic analysis is important for company. So, Pokok security today have not been sold. The contract settled last Friday at 48.5 cents a share, and the market capitalization for the latest 2019 is 199.02 million market capitalization, and the stock has improved nothing from a year earlier. Okay, next, the economic analysis for Tomei. As a market sentiment remained low, the financial year 2017 was a rough for a retail industry. As we know, Pokong and Tomei is also in a retail industry. However, a result of its relentless attempt to meet its consumer with more product offering and at the same time to reduce operational expenses. Okay, the company continue to experience a steady increase in revenue and profitability. Tomei is Malaysia only approved dealer for diamond to certificate as the global diamond name. Okay, the accreditation is granted for Tomei exemplary record for consumer care in the diamond industry, and also their initiative to further support and inform the public in the matter of diamond, and to acknowledge the reality that only legal suppliers have responsible diamond sourcing. And then Tomei also has reported that the rising uncertainty triggered by the US and China trade war, which is contributed to the substantial market instability, which it means in particular international gold prices are the transfer in emerging market in foreign direct investment, and as its retail division was impacted by its attempt at the rationalization, contributing to the closing of some unsuccessfully outlets. Okay, for the industry analysis which is focused on Wahchan and Habib. As we know, Pokong, Tomei is in the same industry. So their competitors will be Wahchan and Habib. Wahchan is specialized in gemstones. Meanwhile, Habib is one of the Malaysia-based diamond and imaginative gold jewelry. Because four of these companies are in the same industry and they have a similar product, which is the assumption that jewelry firms operate with a strategy of price war is very popular. Nevertheless, specialty jewelry companies may not to compete on demand but on consistency. On the other hand, brand identification and recognition tends to limit rivalry, which is the brand that be trusted by the customer will have more profit than the brand that are less known by the customer. Okay, as the jewelry business expands worldwide, the biggest player in the sector are opening up more outlets, which is, as we know, Pokong is the most outlet in the Malaysia, which is 100 outlets. Okay, in addition, in order to increase their market share and focus on demand, it creates declining economy which is profitable by stealing market share and cause pricing battle for multiple firms in the sector. Sorry, I want to add one more point, which is a similar competitors sell the same goods and services with the same goal of profiting and market share development in the same target area and consumer base. And in a business environment close to themselves, the direct competitors would reach the same market as the other company would offer the same good of their competitors do.
Okay, for this slide, I will present about the company analysis, which is the four ratio of the company analysis for Pokong and Tomei. So this is the first ratio, which is liquidity ratio, specifically to current ratio. Okay, as you can see in this graph, on 2017, the current ratio for Pokong is more higher than Tomei. So in the 2018, also the same. Uh, and for 2019 is also the same. So formula for the current ratio is the current asset of the company for that year divided by the current liabilities of the company for that year. Why we choose a current ratio is because a current ratio smaller than the average for the sector may imply an elevated likelihood of pressure or default. Likewise, if a company has a very large current ratio to its peer group, the management cannot effectively utilize its properties. So to compare Pokong and Tomei, the graph shows that Pokong have a great liquidity compared to Tomei for the previous 3 years. So a company with a current ratio of less than 1 does not have funds in certain situations, whether all of them are at once due to meet its short-term commitments, whereas an established ratio of more than 1 implies that it is likely to stay viable in the near term with financial resources. But because the current ratio is taken at a glance, the liquidity or solvency of a business is typically not completely reflected, which means for simplify this, yes, the current ratio for Pokong is have a great liquidity compared to Tomei. Okay, for the net ratio that I will present is turnover ratio, inventory turnover. As you can see in this graph, on 2017, the inventory turnover for Tomei is higher than Pokong, and on 2018, the inventory turnover for Pokong is higher than Tomei, and the same on the 2019. And the formula for inventory turnover is the cost of goods sold for the cost of goods sold of the company on that year divided by inventory of the company of that year. So why we choose the inventory turnover is because the ratio uh, can be compared to the industry average when have a low turnaround inventory. That implies that you have weak revenue and surplus stock that Tommy need to pass around. But if the company have a fast turnover inventory, this suggests good profits, if not major discounts. In terms of fast inventory turnover, Pokong sell goods rapidly, suggesting strong overall success in market. So the higher in a given year a company's product utilization percentage, the better for the sustainability of a business. Small turnover of inventory indicates weak revenue, excess production, and bad production availability. So for this inventory turnover, the Pokong company is more better than Tomei company. Okay, for the next ratio, we present about the performance ratio, return on asset ratio. As you can see in this graph, on 2017, there's a slightly different between Pokong and Tomei, but Tomei is higher than Pokong, and on 2018, the return on asset for Tomei is decreasing, but return on asset for Pokong is maintained. So that's mean Pokong return on asset Pokong is higher than Tomei. And on 2019, the Pokong is higher than Tomei. So formula for return on asset is profit before tax and interest for the company on that year divided by total asset of the company for that year. Why return on asset? Because return on asset is a form of investment return calculation that calculates a company's productivity compared to its total assets. This ratio indicates how well a company's profit, example for net income, is relative to the money that it spends in properties. The truth, the profit, the more effective and successful management the economic tools are used. For this graph, Pokong shows that they can manage their asset management well better than Tomei. So yeah, for the return on asset, Pokong is better than Tomei. Okay, on this slide, I will present about our last ratio, which is margin ratio, gross profit margin. So as you can see in this graph, in 2017, Pokong is slightly more higher than Tomei. And then on 2018, Pokong is until 2018 and 2019, Pokong is higher than Tomei. So the formula for gross profit margin is sales of goods sold for the company on that year divided by sales of the company for that year. Why we choose the gross profit margin is because the gross margin ratio measures the profitability of an undertaking's inventory. Higher ratios are just more variable. It makes sense. The firm price the products at a greater proportion of sales with low percentages. All business report an increasing in gross profit margin last year, which implies that each year the gold industry struggles to earn income because of such obstacles. The higher gross profit margin is better, such as Pokong. Both of the company don't have a huge gap, however, in 2019. Tomei, in 2019, Tomei drastically dropped far from Pokong. So based on this gross profit margin, Pokong is more better than Tomei.
Okay, now we'll be proceed to technical analysis, which is the trade discipline used to evaluate investment by analysis of statistical traits such as price movement, volume, in order to identify trade opportunities. So, technical analysis will be focused on candlestick diagram, which are a kind of financial diagram for measuring stock movement. Okay, for this candlestick analysis is for the Pokong. Okay, it is from 2017 until 2019, shows a downtrend movement from August 2018 until 2019. However, in 2019, the graph touched the resistance line and going down under the line, which means the share price is dropped, and most of the existing investors are either going to hedge their share or sell it. As we know that candlestick have many types of pattern, which is you can see on the 2018, which is between January to February. The pattern is being called like three black cross, which is the bearish three black cross begin at or near the top of a present with with three bar reporting lower low close to intraday lower ones. Okay, the other pattern will be shooting star, which is in 2019. You can see between August and October, the shooting star has the same shape as the inverted hammer. Inverted hammer is one of the type of candlestick pattern, which is okay. But the shooting star is a shape by an upright pattern. In general, after opening and hitting a higher indoor point, the demand open marginally higher before closing at a price only above the open light on Earth falling star, which means, okay, you can see at the 2019, the candlestick is downtrend, but when it reach its resistance, it will rebound back to uptrend. Okay, that's for Pokong. The next one will be for Tomei. Okay, for Tomei, the candlestick chart shows the highest on September 2017. Okay, it compromised two candlestick and red candlestick that opened above and looks below the midpoint of previous green frame, which is the green one. It indicates that it took over the session and dramatically lowered their cost. Okay, now let's move on to the type or pattern of the candlestick, which is you can see in 2019, October to December, between it is a bullish bell hole, which is basically a the green opening, which is a downstream cycle. Actually, some of the broker call it as a blue candlestick and some of the investor call it as a green. Okay, so bullish bell hole is one of the design for candlestick. This start at the beginning of the day and also challenge the latest trading tendency to close by the end of the day. Okay, so it shows that on the downtrend in October, the market is characterized by an existing downtrend. Okay, and Tomei, which is the sector open fewer with a big difference against the present downtrend pattern. But shortly after the launch of the business, emotions shift quickly. Okay, emotions shift quickly, as you can see in the 2017 on August, and it's hit high on that time. When the emotion shift quickly, is uh, shift drastically downturn. Okay. Um, okay. So in my conclusion, based on the technical analysis for the buy and sell, I will be recommended for Pokong, as you know it downtrend, but it doesn't touch below the resistance. But as you can see for the Tomei here, it's touched below the resistance. Okay. In a conclusion for the technical analysis, which is actually technical analysis adds panic to among the traders with short position, which will allow the rally to fill short position. Okay. So for the next one, okay, for the conclusion, the key financial indicators for performance, cost measurement, asset purchases, liquidity levels, and long-term solvency is important to analyze the company. Okay, which is the knowledge about the financial ratio is contrast with what of its competitor and industry in the section mentioned and the industry as a whole. Okay. Also, the comprehensive insight and extensive knowledge on the internal and external influences also impact the market. Who would better manage the economic outlook? As we know, in the economy section, economic analysis, Pokong shows a better economic management rather than Tomei, because the Tomei outlet has closed several of their outlets. Meanwhile, Pokong expand their outlet to 100 outlets. Okay. In a conclusion, Pokong cover the income statement and the ratio of trends with annual and quarterly balance sheets and flows, which is since the value of business is a primary determinant of various characteristics that attract investors, including trade. is the usage of market capitalization, which we know the market capitalization for Pokong is much more higher than the Tomei, which is will indicate a company scale. Other than that, it will enable investor to understand one company relative size versus the other. Um, Market capitalization measure that an enterprise values on the open market and its future prospect for the market. In here, we can see the future prospect for Pokong will reflect what investors are ready to pay for the stock.
Okay, then that's all for our presentation. From me, I'm Badrul, and for my friend Maizatul. Okay, this presentation is for our final project, which is we analyze the two company, Pokong and Tomei. Okay, and I would like to thank you in advance to Miss Hidayah for teaching us in this subject, security analysis and portfolio management. So that's all from us. Thank you.
Okay, thank you.